Investors, you're going to want to pay attention. Edmonton's real estate market is shifting and the numbers prove it. In January, the median residential home price hit $417,700, up 7% from last year. But there are still hidden gems out there. Rental demand is rising, vacancy rates are tightening, and certain neighborhoods are still undervalued. If you're looking for the best investment deals, cash flowing properties, and market insights, this is the update you need. So let's break it down. Hey everyone, welcome back to the channel. If you're serious about real estate investing in Edmonton, you know that staying ahead of market trends is the key to making the right moves. This month, we're breaking down exactly where investors can still find undervalued deals, what's happening in the rental market, and what first-time investors need to know about shifting conditions. Whether you're flipping, holding, or just starting out, this is the intel that you need to make a smart investment decision. Before you start analyzing your next deal, make sure to watch this entire video because I'm covering specific neighborhoods where you can still buy below market value, rental insights that could impact your cash flow, and key strategies for navigating today's interest rates. Stick around, this info could save you thousands and help you build long-term wealth in Edmonton's market. All right, first things first, where are we at in the Edmonton real estate market right now? If you've been following the market, you already know that things have been shifting. January 2025 numbers confirm that prices are rising, but smart investors are still finding undervalued properties with strong upside potential. Inventory is still tight, which means good properties are getting snapped up fast, but strategic investors are finding deals in the right locations. Median home prices have climbed to $417,700, which is a 7% increase from January 2024, which is showing steady appreciation. Interest rates remain a little bit elevated, which are keeping some buyers on the sidelines, but for those who are ready to act, this opens up some negotiation opportunities. Rental demand is strong with low vacancy rates in key areas, making now a great time to pick up rental properties that can generate reliable cash flow. With prices up, but inventory still moving quickly, this is a market where strategy is everything. Unlike the frenzy of previous years, today's conditions allow investors to negotiate a little bit better deals, target distressed sellers, and secure properties at fair value rather than overbidding in a highly competitive market. Another critical point is that supply is not keeping up with demand. New listings for January sat at 2,448, while total sales hit 1,597. That's a 65% sales to new list ratio, showing that well-priced properties are still moving. This creates two key opportunities for investors. Sellers who need to move quickly, these are your best chances for below market deals. Buy and hold investors who can benefit from increasing home values and strong rental demand. So what's driving the market right now? Higher borrowing costs. Mortgage rates are still impacting affordability, which means fewer buyers are jumping into home ownership. Instead, they're staying in their rentals longer. Good news for landlords. Investors who are cash flow focused will be happy to hear that the rental rates have increased year over year and demand is outpacing supply in several key neighborhoods. Unlike the bidding wars of 2021 and 2022, today's market allows investors to negotiate some price reductions, seller concessions, and a little bit more favorable terms. While prices are rising overall, certain neighborhoods are still offering undervalued properties with high potential. Investors who focus on the right areas and property types can capitalize on appreciation while securing strong cash flow opportunities. We're going to break down exactly where the best investment deals are hiding in the next section, so stay tuned. If you're an investor looking to maximize returns, you need to be laser focused on finding properties that are undervalued but poised for growth. While Edmonton's overall market is heating up, there are still pockets where home prices are below their true market potential, creating opportunities for buy and hold investors, flippers, and those looking to build long-term equity. Here's where the best deals are hiding right now. The first area is going to be in Northwest Edmonton Edmonton and the Calder area. If you're searching for an area where home values are still catching up to citywide appreciation, then Northwest Edmonton, especially Calder, is a prime target. The reason why this area is such a prime target is because median sale prices are at $515,000, which is up from $450,000 last year, but they're still affordable to core neighborhoods. This area attracts long-term tenants, including working professionals and families, due to its proximity to industrial hubs and transit outlets. Prices are rising, but they haven't yet hit their peak, meaning you can enter now and ride the appreciation wave. Many older homes in Calder have larger lots, making them ideal for adding a legal basement suite or an infill project. So the best strategy in this neighborhood is to secure a single-family home, add a legal suite, and watch your rental cash flow increase. If you're looking for a duplex or a triplex conversion, there's plenty of zoned lots that allow for multi-unit conversions and higher returns, which also offers better tenant diversification. Area number 2 is Mill Woods and Southeast Edmonton, which offers townhomes and duplexes with strong return on investments. Mill Woods has historically been an affordable, family-friendly area, but with increasing buyer demand, property values are climbing fast, yet it still remains accessible compared to the rest of the city. The median price for townhomes in this area is at $320,000, which is up from $266,000 last year, a 20% jump. You have high rental stability, driven by strong demand from young families and long-term tenants, and it's still affordable. While prices are rising, they still offer an excellent entry point for first-time investors or those who are looking for low-maintenance rental properties. This area offers quick access to the Anthony Henday, the White Mud, and major shopping centers, which makes it a desirable area for renters. This area has long-term development potential. Infrastructure projects in the area are going to push values higher over the next few years. Okay, so number 3 is going to be Leduc and Stony Plain, which are known for their suburban lifestyles and stronger cash flow. For investors willing to look just outside of Edmonton, Leduc and Stony Plain present some of the best opportunities for long-term appreciation and cash flow stability. The median sales price in these areas is $515,000, which is still lower than comparable Edmonton neighborhoods. Proximity to the Edmonton International Airport and strong job growth in logistics, aerospace, and energy are driving demand. More and more families and professionals are moving to these areas for affordability and quality of life. Unlike inner city Edmonton, land here is more available, which is creating opportunities for new builds, duplexes, and multifamily projects. So if you're interested in a place like this, you need to buy now before prices climb further and demand is increasing and home values are following. And if you're a long-term investor, holding on to some land in these growing suburbs could pay off significantly in the future. Okay, so now let's talk rental properties. One of the most critical pieces of the real estate investment puzzle. Whether you're a seasoned landlord or thinking about acquiring your first rental property, understanding where the market is headed is key to making the right move. Right now, rental demand in Edmonton is surging, and investors who position themselves correctly can capitalize on rising rents and shrinking vacancy rates. The vacancy rates in Edmonton are declining. While the national average hovers around 3 to 4%, Edmonton's rental market has tightened to around 3% for purpose-built rentals and around 2% for apartments, creating lower than average vacancy rates in high-demand neighborhoods. The rents are also increasing. Year over year, we're seeing rental price growth of approximately 5 to 7%, with some property types seeing double-digit increases. Condos, townhomes, and single-family homes in commuter-friendly areas and those near schools are seeing some of the fastest absorption rates. For investors, this means one thing: rental units priced correctly and in the right location are being snapped up fast, and that window to secure a cash-flowing property at a favorable price is closing. So what's driving this rental boom? There's several key factors that are putting pressure on Edmonton's rental market, making it a prime time to invest. The first one is higher interest rates. These rates are keeping buyers in their rentals longer. With mortgage rates still kind of elevated, many would-be homebuyers are delaying their purchase and staying in rentals longer. This is pushing the rental demand higher while also reducing turnover. Alberta remains a hotspot for interprovincial migration as people from higher cost markets like Ontario and BC relocate for affordability and job opportunities. Many of these newcomers rent before they buy, which is also increasing the rental demand. Edmonton continues to see job expansion in technology, logistics, and energy, all of which bring a steady stream of renters looking for housing near employment hubs. Stricter short-term rentals, like Airbnb regulations, have caused some investors to pivot into long-term rentals, which has helped tighten the traditional rental market even further. So which properties are performing the best? If you're looking to maximize cash flow, here's where you need to focus. Duplexes and secondary suites. These are outperforming any other property type because they allow landlords to double their income streams essentially with one property. With legal secondary suites becoming more and more common, these properties are seeing low vacancy rates and high rental returns. There's also townhomes in family-friendly areas. Families that are looking for affordability are opting for townhomes over single-family homes due to their lower rent, and properties near schools and transit hubs are leasing quickly. And of course, if you can find an affordable single-family home in high-growth areas, because some investors tend to shy away from single-family homes due to their lower yields, but in areas like Mill Woods, Leduc, and Stony Plain, cash flow can still be positive if the rents keep increasing and the purchase price remains competitive. While condos saw softer demand over the last few years, rental demand has picked up due to affordability constraints in detached homes. Investors who buy newer, well-located condos are seeing better appreciation and rental stability. If you're wondering whether now is the right time to add to your rental portfolio, here is the investor's perspective. You should, if you're looking to buy and hold a property with strong appreciation potential and you want to capitalize on rising rents and take advantage of these low vacancy rates. You can structure a deal that cash flows even with today's interest rates. However, you should be cautious about adding to your portfolio if you're solely relying on appreciation without positive cash flow. Rising rates could eat into profits. You should also be cautious if you're considering short-term rentals without doing all of your research on these local Airbnb regulations and where they're headed. You're gonna also want to be extremely cautious if you're not doing your research on neighborhoods and local tenant demand, because location is key. If you're serious about maximizing returns, consider purchasing a property that allows for a secondary suite or multi-unit potential. It's one of the fastest ways to increase rental income and build long-term wealth. Okay, everybody, that wraps up your Edmonton real estate market update for January of 2025. We've covered a lot today, from where to find the best deals to rising rental demand and what all of this means for your investment strategy moving forward. But here's the bottom line. Prices are rising, but there are still undervalued properties where investors can buy smart and build equity. The rental market is tightening, meaning well-positioned landlords will benefit from these low vacancy rates and rising rents, and that buy and hold strategies are winning right now, especially if you're focused on multi-unit properties, secondary suites, and family-friendly rentals. If you're an investor looking to capitalize on this market, now is the time to act strategically. Whether you're buying your first property, adding to your portfolio, or just keeping an eye on opportunities, the key is staying ahead of these trends. And that's exactly what we'll keep doing on this channel. Drop a comment below. What part of the market are you most interested in? Undervalued properties, rental trends, or investment investment strategies. I'd love to hear from you. Don't forget to like this video if you found it valuable, subscribe to the channel so that you never miss an update, and turn on notifications. Next month's update could be the one that helps you make your next big investment move. Want personalized investment insights? Reach out to me. I'd love to help you find a high return property that fits your goals. Thank you for watching, and I will see you in the next video.